any Ethereum guy, pick a name. And so you're going to have to invest all your wealth into either Bitcoin or any other ones. Which one will you pick? They love that there's 3,000 altcoins out there, the banking system. I'm sure they do love it. The reason why Bitcoin is not going away, very fundamental reason that we must not forget, is decentralization. From the coin that has the most hash power is the one that will be more solid and less likely to be hijacked. The reason why they didn't crush those altcoins like XRP, the banking system, whatever. If we do that, we can't do that to Bitcoin, and people will see that we can't crush Bitcoin, but we can crush all those altcoins. And it's better for them to divide and conquer.
There's Bitcoin, and then there's everything else. Joining us today is Phil Champagne, author of The Book of Satoshi and Altcoins vs. Bitcoin, a legend who's been preaching to newcomers for years. In this interview, we're tearing down the altcoin house of cards and showing you why Bitcoin stands alone. Phil lays out the critical significance of decentralization and proof of work, Bitcoin's rock-solid foundation that no shitcoin can replicate, the importance of network effects, and Bitcoin's unmatched security, 16 years of attacks, and Bitcoin stands tall while altcoins bleed out. And we're not stopping there. Phil's dropping realizations about Satoshi and knowledge bombs that'll solidify your conviction. Going beyond Bitcoin to give you the skills and insights to escape the fiat matrix. This is Mentor Sessions. Phil, thank you very much for joining us today on this very special occasion with your big announcement. So let's get right to it. Why have you waited so long to reveal that you are indeed Satoshi, and why did you pick our show to do it?
No. I am not going to play a Dr. Craig Wright here.
Speaking of Craig Wright, that's how you got some additions to your book. You have a second edition of it because of some information that was revealed in us all finding out that Craig Wright, shockingly enough, is not Satoshi. What can you tell us about that?
So, yeah, it's this. I had a segment in the chapter in the beginning of the book why there's a second edition, and obviously it goes over all this crazy stories that happened with him, and so much that he was threatening people, so I'm going to sue you because you're saying I'm not Satoshi. And so basically there's a group of people, Copa, I think, they sued him so that to prove, okay, he's not Satoshi. And then this group won in court. So now he has to put his statement in his Twitter account of I'm not Satoshi. So, but during this court, Marty Malmy and others reveal their all the exchange that they had with Satoshi Private Exchange. So that was being able to collaborate with the interrogation during the court with Craig Wright about, to see the mismatch between all those conversation and what he was saying. And there was so many irregularities during his statements that didn't match, so that it was just obvious. In fact, the judge at the end made a real strong statement saying that it's incredible, So it was good for that. So that's the one contribution that he's done, is at least make us get more private email exchange that was happening between people. And there were quite interesting stuff between Marty Malmy and Satoshi, because of extensive amount of email between the two.
I have to say, I guess appreciate the irony of this guy trying to assert that he is Satoshi by using the fiat courts. Like, could you think of a more ironic way to attempt to do it? Like, that alone should have been right then and there. Like, we know this is not the guy. Amazing.
Yeah. And the insult to all this is that Bitcoin white paper, he was suing Coinbase and everything for saying that he owns the copyright to the white paper Bitcoin. I mean, seriously, completely. When you think about the software itself, it's with the MIT license, which is free to distribute. if Satoshi knew there would be a crazy guy like this, he would have put the MIT license as well on the white paper.
Yes, of course. Well, a lot of people speculate sometimes when you first get into Bitcoin, who is Satoshi? What is Satoshi? Is it a person? Is it an organization? But I've heard you discuss before, as we've heard from others, that it's really not important who or what Satoshi was. It's more important to focus on the actual product here, the actual service, and what about it works, and what maybe might need some improvement along the way. And that kind of gets into certain ways that Bitcoin has changed a little bit over the past, I don't know, what are we on? How many years now? I'm bad at math. What are we doing, Nate?
To now
15?
we are 15 years.
15 years. So, we've seen a lot of altcoins come along saying that they're a big improvement on Bitcoin. And yet Bitcoin keeps chugging along and all these altcoins keep going by the wayside. So what is it about Bitcoin that makes it so enduring and all the other altcoins, shitcoins?
Yeah, so there's multiple aspects to this, to Bitcoin, the software and everything. It's open source, and but the fact it's actually jumping through so many, converge on many aspects of science and multiple aspects. You've got obviously cryptography, you've got the concept of open software, and you've got the fact that the network effect. These are all parts of element that you have to aggregate together to understand Bitcoin. And the fact that we are not, so many people are missing that point. The reason why Bitcoin is not going away, even though some are better, faster, and all that, is multiple aspects of it. One is the very fundamental reason that we must not forget is decentralization. It's so important, and the type of technology that is the most solid in terms of decentralization is proof of work. And all the other ones, and certainly things like XRP that is using a permission, not a permission list, but actually a mechanism to, it's a proof of authority, I call it. So all those are way more subject to being hijacked, And so that, first of all, that means proof of work. But then proof of work implies that you need to have high amount of hash power and the most, from the coin that has the most hash power is the one that will be more solid and less likely to be hijacked. And that has been proven with Bitcoin Gold, I think, which is a derivative. It's just like Bitcoin Cash, and it's also using proof of work. And at some point, I think the exchange, they asked for something like 2 weeks of before they actually accept your transaction. To be
2 weeks of confirmations?
2 weeks of confirmation, something like this. Yeah. Because they got burned. It's like someone was sending those things, but it was easy to do a 51% attack on those small coins.
So if I'm at a 7-Eleven, I'm buying a Slurpee. Like, no, hang on a second. Just give me a couple weeks. It's almost there.
Yeah.
Jeez.
Yeah.
Interesting. So I want to expand on that a little bit too, Phil, because there's probably a lot of people in the audience that are hanging out, that are listening, that are new to the space, that are here after the Blocksize wars, right? So they might not even be familiar with the different forks and the different other proof of work coins that are necessarily out there. Can you talk a little bit about, we got some other shit coins that are doing the proof of work thing? We had the BSV and we had our Bcashers as well too. What's wrong with those, Phil? Those are also using proof of work. Are they just as easily susceptible to this rolling back the clock with the 51%? Which, for anyone who's not familiar with what the 51% attack is or what the vulnerability is, could you dive into that a little bit?
Yeah, so we can start with that first. So the 51% attack is which is talked about by Satoshi, was already so many of the points that are brought up today as a point of conversation actually were discussed in the first 2 years while Satoshi was there. And that's also something that people are so amazed to see, is like, gosh, those points were all talked about in the early days. But the 51% attack is that the fact that it's the longest chain that is going to be the one that has the Bitcoin that will be confirmed. But a 51% attack is this someone, an entity or a group, has a 51% of all the hash power. They can disregard any other blockchain. No, they come up and they say, oh, I have the next block, but then they can disregard this other block and then they kind of keep going. And that's what was happening with that Bitcoin Gold, regardless of anyone who was actually coming up and making those transactions at different blocks following this, they will pretend they are only themselves and they will keep working on their own blockchain separately. And because by the protocol, it says the longest blockchain. So because they have a higher power, they will always be over the long run, the longest chain. And so that's why you end up with the 51% attack. Now, the controversy started in 2014, 2015, I forgot which year. But there was all about Bitcoin, only 7 transactions per second, and we need to beef it up and all that. I mean, the funny thing is that with Lightning, which is something that, even Satoshi never thought about, and which proved, the founder didn't even conceive something like this. And, but so all the writings and everything, it's like, well, okay, obviously the only solution is eventually with super high bandwidth by any person, we could be able to increase the block size and all that, But what's funny is that he's the one, Satoshi, who actually put up a limit of 1 megabyte per block at some point. He just had this thing. So he was aware that it would be a problem if we just let it grow any size that we wanted. And that was a big argument about, okay, we need to increase the block size. And there was a big war about that. And the Block Size War is a book by Jonathan
Beer.
Yes. Beer. And it's an excellent story about the whole thing that was going on there back then. And the big blockers were pretty angry, kind of not happy with the fact that there was a segregated witness that came up, and that is a nil feature, a soft fork that happened, where it reorganized the way the blocks were. So it allowed actually the Lightning Network, but it also allowed the block size to be increased without any hard fork. But it didn't matter. Bitcoin Cash came in. And one thing that I always complain about them is that they're the one who actually did a fork. They should have also changed the format of the Bitcoin address. So many people got burned by sending it on the wrong chain in the beginning. Now they changed the format, of later, a year later or something like that. But in the beginning, people was like, oh, okay, I have those Bitcoin or Bitcoin Cash. And then you go to an exchange, but they use the wrong, they click on Bitcoin Cash and they send their Bitcoin and that it's not accounted for and lost. And, it's sent to a wrong address that is not accounted for by the exchange. And so people were burned with this. But, when you create a fork, might as well also change the formatting to make sure that you're not going to have those things. So I was really angry about this kind of thing.
Wow.
Man, it seems like what would you call it? It's like the narcissism of it, because they probably didn't want to do it because they were the real Bitcoin. Yes. So we're not going to change our format because we're the vision of Bitcoin.
But if you're going to be, first of all, you have to be, just like you said, a form of narcissism, because that means you assume that the other one will die off immediately. And the second thing is that, you're the one doing the fork. So if you're going to be changing things, might as well change that as well,
Imagine mining Bitcoin cheaper than buying on an exchange, with direct payouts hitting your wallet like clockwork. SAS Mining makes it real. You own the rig, no gimmicks. It's your asset pumping out Bitcoin every single day. No markup on hardware or electricity. They get paid when you get paid, fully aligning incentives. Mining Bitcoin below exchange cost is a great way to DCA your stack. It's so simple, anyone can do it. No tech skills required. You get white glove support and education, a rig performance guarantee, plus it's powered by 100% carbon-free energy prioritizing renewables. Ready to take control of your Bitcoin future? Visit sasmining.com by scanning the QR code or clicking the link in the description down below to book a free consult and start mining today.
Are you still delaying taking self-custody of your Bitcoin? Do you feel secure in your current Bitcoin setup? If something were to happen to you, would your stack make it to your loved ones? At Bitcoin Mentor, we've helped thousands of people level up their Bitcoin security and fast-track their understanding. If you find that you simply don't have the time to go through all the books, the tutorials, the guides, you can book a free one-on-one strategy session with myself, Gary, or any of the other great mentors by visiting bitcoinmentor.io. Scan the QR code or simply click the link in the description down below to find out how Ben and the entire expert team at Bitcoin Mentor can help you accelerate your Bitcoin journey. Use promo code BTC Sessions for 10% off.
Phil, I got a question for you. Speaking of Bitcoin Cash, I've heard it argued from people that who are very passionate about it and who, in many, many ways, otherwise agree with many Bitcoin maxis philosophically and about economics and everything. They would argue that Bitcoin Cash is the pure, originally intended way to go with Bitcoin, and that it's supposed to be a currency that can be exchanged all around the world quickly, peer-to-peer, wherever, and that Bitcoin is the one which doesn't really align with the original vision. What would you say to that?
So, first of all, it's trying to sometimes they actually are trying to use every phrase that Satoshi was saying as an argument in their favor. It's like, okay, you're trying to. It's wrong because Satoshi didn't even conceive of something like the Lightning Network, and we are not going to be able to. It doesn't make sense, and the bullshit vision coin (BSV) will never be able to. They had so many problems because they had so much big blockchain that the network cannot be able to organize itself when the blocks are too big. So at some point you got a chicken egg. There's a 10 minutes window that we have for every blocks. And that's very well adjusted with the 1 megabyte blocks and compared to, when you account for all this. I mean, if we have subspace channels like Star Trek where everything is instantly transported, then yeah, you can imagine, big blocks, But,
Phil, I never thought we'd be talking about subspace on a Bitcoin podcast, but here we are. Sure. Why not? Let's go with it.
So just to mention that, so it's like, we have to account for, it's a complex, again, there's a networking technology involved as well in the complex as an additional point into Bitcoin technology. It combines so many aspects of technology and human psychology as well. The network effect being so much important. The one thing that is reason why Bitcoin is gaining over all the other ones is like, okay, it has the bigger Bitcoin hash, a more recognized value. And therefore, the expectation is to the value of what a currency. Actually, it was a big debate. I mentioned that in the beginning of Bitcoin versus altcoin. There was Peter Schiff arguments about, it needs to be a commodity and so on. But in reality, there was, I'm sorry, I should have refreshed my memory about all those economists. But another economist mentioned, Austrian school as well, that actually it's more like the expectation that tomorrow it's going to have value. Mm-hmm. So that's what actually makes a currency keeping its value is the expectation that, okay, what it is today will be happening tomorrow. And when you look at it from a technical analysis perspective, when you look at charts and all that, you can look at it, okay, the 200 moving day average is what people in their mind, without realizing, it's like, okay, yeah, Bitcoin has always been above $30,000 for the past 4 years and so on. So then the expectation is like, okay, it might fluctuate, but I know that over the long term, with a track record, it's going to keep going like this and growing. And so it's a safe investment, like I can put it and then not think about it for the next 10 years. I mean, how many, if you were pointing a gun to someone, any Ethereum guy, pick a name, and so you're going to have to invest all your wealth into either Bitcoin or any other ones. which one will you pick? And I'm telling you that if you comes to a situation like this where you don't have a choice and you'll be stuck with it for the next 10 years and 20 years, the majority of people will say Bitcoin, because, all the other ones is like, well, okay, XYZ coin, I might love it, but, it's very speculative about if it's going to still be around. Solana, pick anyone.
And there's always a darling for every cycle. And you're absolutely right, too, because essentially at the end of the day, savings is just preparing for like the uncertainty of the future. That is the whole point of savings, right? Is to be able to carry that forward, but it's to deal with the uncertainty of I don't know what's to come. And so you're going to be whether you realize it or not, you're going to be projecting what you think is most likely going to still be there, be the same, or be more. And that has to factor into your, individual subjective at the margin valuation of all these things. Interesting. Very, very cool. I'm curious then too. So I want to get into some more details about some specifics of why they're terrible shitcoins and why no one should touch them. And you should learn these lessons rather than getting burned by the stove. But before I do, I'm really curious your outlook on where we currently are in Bitcoins versus shitcoins, or altcoins, whatever you want to call them. Because I found this cycle to be particularly interesting in the sense that, like, you're right, they used to, so there was, we can touch on this as well too, because there's always a trade-off there. I think it was Jeff Booth that coined the blockchain trilemma. So you can have security, decentralization, or scalability. Basically, pick two, right? You cannot have all three. And Bitcoin is all in on decentralization and security, and we move scalability to the other layers as well too. So I'll start with, it used to be the case that these people coming in, these scammers, were trying to project that, we have some utility, it's going to be faster, was constantly on to scalability, was always the angle they were kind of usually approaching from, or something new, or something like the world's computer, some bullshit like that. But this cycle, no. This cycle, all those pretenses have dropped by the wayside. So, Phil, at the very least, lie to me. Are we almost at the point where we can be done with these things? Is meme coins the end of the shitcoin cycles? Or is this game going to go on forever? How do you see things progressing in the future?
So this goes back to you more like human behavior than technology almost. Yeah. And, we're still in a world of fiat where people are trying to save themselves through speculation. When you look at how things were, for example, in Weimar Germany in the 1930s, 1920s, they had to figure out a way to survive. And at some point, the speculative industry, if you look at it as an industry, was actually sucking up more energy of the market overall than manufacturing or anything at all. In services, because the value of the currency was evaporating so much that people were actually had to fight more about, okay, once I have my Dutch mark, I need to get rid of it. I need to get something. And US dollars or gold coins were not that easily accessible. So now it was like, I need to buy a wheelbarrow. I need to anything that has value in it. And that kind of thing is, I'm looking at this, pointing this out as the extreme. But it's easier to understand when you look at things from an extreme perspective. Now, you tone down, we're not in hyperinflation. Well, at least not yet. And but we're still in a slight inflation rate, at some point it was 10% or maybe at least something around there.
Phil, the official US CPI estimate says 2 or 3%. So I don't know what you're talking about with this 10.
Yeah. Well, yeah. So yeah, obviously if you account specific things, you might get away with it. But actually, there's always this thing where, okay, the value of asset are going up. There has to be some value coming out. I mean, more dollars to supply for this increased rate of asset increasing in value. So even if it's not in commodity at some point, it will be. But just looking at gold, it's been going up so much that it's already showing a sign that there is still some form of inflation. Now, sorry.
Oh, I'm sorry. I'm the ass that interrupted. I apologize.
Are meme coins the end of shit coins?
Oh, yeah. So with these lower inflation rate, there's still, anyway, people have been known to, okay, I can't keep my dollars sitting up in my bank account, in my checking account, and leave it there. It's 30,000, 100,000, $1 million, not sitting there and nothing. So I have to figure out something with it, and people have, they know they've been conditioned since the 70s to always have something to speculate. And they're forcing people to speculate, while in the 1900s, early 1900s and 1800s, all you had to do to save for your future was to pile up gold coins in, or even currency, the currency that was tied at least to gold. And, it's like something that cost me, if I need $10,000 per year to live comfortably right now, in 30 years, it will still be $10,000 per year. There was really a sense of calmness financially for people back then. At least there were other factors, obviously, they were scared about, but on that part, they had at least a certainty, and that's the reason why companies could provide and defined benefits for their employees, and that all vanished in the 70s. It's like, well, now I have no clue what in 30 years from now, if I need $100,000 today, what would it be in 30 years and 20 years? Nobody has any idea. No one can. Oh, you can make a speculation. Oh, okay, inflation 5% per year, let's say, and over the year, but you could have a burst. Whoops, just like we had in 2020 that blew this up. So based on that, the aspect of I could get more by buying those altcoins that was going to do a jump up. That, or mining stocks or anything that might have a burst of high. This is very attractive to many people, mostly those who are just joining Bitcoin and all this realm, and they are actually do not have any notions of trading, and they get slaughtered. But good traders, fine. I mean, if what you're going to do, you can look at those things and figure out, okay, I expect this thing, I'm going to get out and increase my Bitcoin. I did that in the past year. My goal was actually to get more Bitcoin, not to that shitcoin, but to trade between those Bitcoin and shitcoin in the purpose of getting, it's actually not, the dollar was not even involved, it's Bitcoin to that shitcoin. And the chart was just this Bitcoin, the shitcoin versus Bitcoin chart that was looking at. I didn't care about the dollar and that. And my goal was Bitcoin was the goal.
It's very interesting. You bring up a good point in the sense that, even touching back on that idea of, basically planning for the future and savings, is that Bitcoin is savings technology. And as so long as, until Bitcoin can help us restabilize the world and bring that back, people are so uncertain about what's going to happen that they're continuing to look for speculation, which means they might continue to be looking for the next big thing, or they'll be so both fear and greed, fear of the unknown in the future, and the greed of what they can maybe get now, will probably have these stupid things continue chugging along. Interesting. Okay, so with that, then again, I will drill down to some specifics, but I'm curious because you've got in this wonderful book, Altcoins versus Shitcoins. Sorry, Altcoins versus Shitcoins. Bitcoin versus altcoins. What I'm curious about is, and this is actually incredibly helpful for me, and I'm sure a lot of Bitcoiners as well too, is that I still get questions from people who know that, know what I do, know I'm Bitcoin only, and they'll still be like, yeah, but what about this, right? In your work, in your research, in the time that you've been talking to these people, what have you found has been an effective communication, effective way of illustrating, guys, Bitcoin and altcoins are in no way, they're not the same thing. This is where you want to be. What message have you found really resonates with people?
Most often is to point out that the importance is what is recognized as much more demonstrated as a dominant factor that is safe and is being recognized. There's it's more like, okay, it's been there for a while. There's the network effect you have to consider. There's multiple aspects, but when you have to boil it down to someone new to, I will say to them is like, you need to learn more about, because the thing that is so difficult for many is like they don't. I saw a tweet like this that was brilliant, because there are two things that are very difficult for many to understand. Technology, software technology, it's already blurry for the majority of people. And on top of that, the real economy, foreign, the Austrian School of Economy, and the reason why, how does the dollar work? You work for that shit. Do you know how it actually is created, and that it's a debt-based currency? All those things they don't know. I mean, I remember telling that to someone. They couldn't believe what I was talking about. It's like when you're taking a loan at the bank for your car, or if you swipe your credit card, and then for a restaurant, $100 is going to get created. And once you pay it at the end of the month, that $100 is like matter, antimatter, dollars, and the debt goes back. But the problem is when you've got this recurring debt, like a loan, whatever, that is paid over, but then if the dollar is created out of debt, but the debt keeps increasing with interest, there's always more debt than dollars. And I mean, these are things that are so beyond. They couldn't believe it. Oh yeah, wait, the bank is not going to create dollars, and this is how it works. It's funny thing is that bankers, bank accountants, whatever, they know. Yeah, we create this thing, but they don't know the whole picture anyway. So it's funny that they managed to, in school, for banking school, I don't know what it's called,
Banking school.
to mention just that part. It's like what just in a bubble itself. This is how the mechanism works. That don't ask question about the overall economy and the fact that that means if on aggregate, there's always going to be more debt than dollars, and therefore it's only a matter of time that it's going to implode unless the debt ceiling should be more called a debt target, because, we raise the debt target, we're going to get it, we will get it, and we have to, otherwise it implodes.
Absolutely incredible. I want to pivot a little bit, but before I do, Gary, what questions do you have, or what's on your mind?
No, I had a couple questions, I guess. We make fun of altcoins and shitcoins, and in many respects, rightly so. But I guess to play devil's advocate for a moment, they do seem to serve a bit of a purpose. And I think Michael Saylor was saying this, and if he wasn't, maybe it was somebody else I was listening to, that they kind of serve as an arena to try out different things. And if I may make a sports analogy for a moment, you have the National Football League here in the United States, and there have been other leagues that have come along, like, say, the XFL, which everybody knew was going to go nowhere. They didn't have good players. It wasn't that great of a product, but they did have one neat innovation where they had the camera go directly over the field on these wires, which allowed for like a much better view, which the NFL later adopted. So it seems that there are, certain aspects of some of these altcoins or shitcoins where they say, yeah, well, Bitcoin doesn't do this. We do. And I think maybe it was Saylor or somebody else who argued that these advances can be adopted by Bitcoin over the course of its run, either directly, onto the chain itself or through second layers. So are there any recent advancements in Bitcoin, either on chain or in second layer, that you think are particularly good or bad, or any that you'd like to see in the future?
So I totally agree with this statement. I think that, it's important. For example, the Monero experiment about, I'm hoping that eventually there's a layer 2 kind of thing that, makes those points about, first of all, we already have, Lightning Network has alleviated the problem of transaction speed and so on. But it could really be improved, Lightning Network, because it's 1-to-1, and then you have to balance the interbalance between those two endpoints. And if it's unbalanced, you have to rebalance it and all that. It's understandable, but it's also tied to one single. So there's a possibility that eventually, big banks, for example, will be your endpoints, and then you're connecting with banks, or even they're actually holding your your Bitcoin and they are managing a layer 2 between all themselves. That kind of thing is a direction that is not going to be ideal. At least, it could lead to that fractional reserve banking that we don't like. And so it's important to keep an eye on those things. But what I was talking about in the book, at some point, there was a coin pool kind of thing that was in the discussion, but there's something else that I heard about. That's ARC. Yeah. And so actually I'm starting reading about it because, and these kind of things where it's more going to be a pool of things, that will allow for multiple people to join or move. And then if you combine those things with, all the additional layers of technology, that'll be similar to what is happening in altcoins. I had an argument with, Safety Amos at some point. I was on his show, and he didn't see anything, the value going on with altcoins. And one of the things I mentioned is like, well, these tokens, for example, could be used for example, stocks, And then he says, well, Apple shares, they're a physical company. What's the point? But the point is right now, unless you have the paper certificate of your coin, your shares at home, most likely for the majority of people, they own their shares. Your shares are actually held by Schwab's or E-Trade or whatever. And they are, with all the fine prints, they're allowed to borrow your shares and lend your shares to somebody else who's going to sell them. So eventually you really have fractional reserve banking of the coin.
Stocks.
Stocks. So your stock, of a company, you see the supply, all that, and the total number of shares, but actually you're actually, some of your shares are also owned by somebody else that a short seller has sell it to. So we're two people who owns the same share, and obviously it's all in the system. But that is something that if it was on the blockchain, then this problem will be, the accounting of number of shares will be visible for everyone. So there's actually this value in it. So eventually, the problem with altcoins like this, Ethereum or all that, is you split up with another currency that has to be used for the underlying payment of those transactions. So ideally, it will be in Bitcoin. That's so if you have this as in some way, we have this with a liquid network.
Yeah.
Which is, so that'll be something that is much more feasible. The problem with Bitcoin liquid network is that it's that too is it's not decentralized in terms of their system, because it's also a proof of authority, this thing. But we can go, this is just show where things are leading to. And so we might be, I was thinking it may be a proof of stake of a layer 2 proof of stake to Bitcoin, where actually, obviously, the staking will not provide you any new Bitcoin. The only thing you're going to make money out as a node will be through a transaction, and that's it, because the real Bitcoin are always created on the real blockchain. But it's a one-to-one and all that. So at least it's permissionless, sort of. You need to have Bitcoin to be able to stake. But and proof of stake is not as perfect, but at least it's better than proof of authority to me,
And it has to be, even if we're going to roll it out, it has to be built on proof of work with Bitcoin at the base layer to begin with. So essentially, it's another abstraction from there. I was saying, you guys are too kind. I take the a little more aggressive side on the altcoins there. And the thing for me, but it's interesting that you brought up Liquid, because I didn't group Liquid is the federated sidechain. I use it all the time for small amounts. I find it I love Aqua Wallet, Bull App. I think these things are great, tons of fun, and good for small amounts. But you're right, there's trust there because it's a federated sidechain. Now, a lot of the companies that are involved in that federation, I'm already sending them my fiat to buy more Bitcoin. So I already had a degree of trust with them. But the distinction that I was going to make, and that is an interesting comparison, is that for anyone that, talking about Bitcoin doesn't do this thing, so I'm going to try and do this thing elsewhere. It's like it's praxeology. It's actions speak louder than words. Like, okay, if you're interested in improving this issue with Bitcoin or this thing that you see as a problem, you do not need a new token. There's no need for a new token. As soon as you be like, oh, this is a problem, so I'm going to launch my new token, then I know your motivation is not improving the situation. It's just enriching yourself and the founders and the VCs and all those ones as well, too. That would be just my opinion on that one.
Yeah. Yeah, it brings that back to a complaint I had with the proof of stake. We're going to create a foundation. People buy with Bitcoin. They get into that coin. They buy a stake of XYZ coin, and then once the coin is launched, you have those things, and then the foundation has all those piles of Bitcoin. And it's very different than the mindset of Satoshi, who started with nothing at all. He just created those things. He didn't pre-mine anything. In fact, he made sure for everyone, and I actually added this part in the second edition. The statement, in the Bitcoin, the first Bitcoin block, which is the Genesis block. It's the Chancellor's
on the brink of second bailout.
Yeah. So that is like the equivalent of, okay, look at the newspaper. It proves that it's actually 2 days. I didn't pre-mine anything at all. I mean, it's funny if he really had that in mind. It's like, I have to prove that I didn't do any pre-mine, even though actually, it didn't matter, obviously, because he was the only one who was mining in the beginning. The interest was not that much, but it still shows and demonstrates an aspect of his mindset that I found peculiar, But it shows anyway a goodwill. There's no, certainly after 5 years he's done so much pre-mining that he can. So anyway, that's the thing that is remarkable. But that's the big difference. Is that there's no pre-mining. While what he could have done is that, obviously with proof of stake, you do need to fund it in the beginning. It would split out to people, But what he could have done is that with those Bitcoin, buy back those coins on the market, which raise the price again. And then once they exchange Bitcoin for XYZ coins from the public, it's going to raise the price. And then they actually destroy those XYZ coins. Now, basically, the price going up means that they're not going to be buying back the entire supply. It'll be maybe half of the supply initially done because the price have doubled. But the point is that they could have done exactly the same thing where, sure, we need to finance this in beginning with this way to distributing the coin, but at least we're not going to be involved with any shenanigans of building up a foundation and giving us a bunch of money, and then all the things that these are another part that I don't like about.
I got to point out one, I had never considered that. So the Chancellor on the brink of the second bailout quote in the Genesis block, I always thought it was just like a tip of the hat to like why we're doing this. I never thought of this as like a proof of life. That's essentially being like, hey guys, I'm starting from now. Yeah. I'm trying to prove to you that I am starting from now. That's an interesting perspective. That's really cool.
Yeah,
so
I wish I thought about writing this in the first edition. I just added it in the second edition. It's like, oh yeah, of course, yeah.
Nathan, may I just mention something just to toot my own horn? This is the first time ever on the show that I knew something about Bitcoin that you didn't know. So you've made like my month, and I should just leave right now. That's great.
All right, Gary, what was it? We're wrapping there. Okay, so speaking of pre-mines, I wanted to ask you, Phil. So tell me, why should I have Bitcoin and not instead rely on a giant Excel spreadsheet controlled by a few people in an Amazon web server? Would that not be better? And in particular, I want to know, because I get this question way more than I should. So Phil, tell me, what's wrong with XRP?
Proof of authority, and Ripple owns 50% of the Bitcoin. 50% of the Bitcoin, of the XRP.
I was about to say,
not
Bitcoin.
That would be terrible.
Yes. But they always point, Satoshi owns 2 million Bitcoins, awful, blah, blah, blah. Okay, but that's just 10%. first of all, compared to 50% with Ripple, it's proof of authority, and they're trying so much opening that a CBDC of some sort by the European Union, whatever. And they actually pushed this up. Look, it's gonna happen. We're gonna make a lot of money. Yeah, okay, yeah, for something devil related, it's really amazing, like how you're kind of in favor of this. It's a totally different mindset, and most of them actually are gold investors, and they are sound money, kind of, many of them. So it's just funny to see how they can not get Bitcoin at the same time being proponent of this CBDC stuff, but also it's very complex. It's very difficult for me to understand exactly what my kind of mindset brought them there. But the point is, it's I will not just, when you look at the chart of XRP against Bitcoin, it's a bunch of needles. It's like this, down, and and then crash down. Okay, it goes up by Bitcoin, a factor of 3 or 4, and then it crashed down big time. And when you're in the past, in 2017, it happened. They obviously, those who stick to it, make a lot of money, but ideally they would have sold at the peak of the Bitcoin, of the XRP versus Bitcoin. But no, they lose all that gain once XRP crashed down by in Bitcoin's term. It's amazing. It's still in the top 10 XRP, even though it's been a long time ago. But I think it's actually more something to wonder about. Look at Litecoin and Bitcoin Cash. They were in the top 10, but now they're number 50 or 60. I can't remember. And it shows that, okay, is it more nefarious? Is it the banker's coin there? If you look, you read The Creature from Jekyll Island. When they wanted to pass the bill, the bankers pretended they didn't like the bill. We're going to float the idea, oh, no, it's not good for business. They actually, came up. When you look at what G. Edward Griffin was telling about in some interview and what he mentioned in the book, it's like, it's when the version came up and of the bill, it's, oh, no, it's not good. Okay, well, the banks don't like it, so I guess it's good, So is it something like, okay, we can't control Bitcoin. We need something else. And then we have to float the idea that we're going to be using this to suck up people into the XRP stuff, versus actually concentrating on looking at Bitcoin and its true value and where it is from, which is really decentralized, because it's not decentralized. And the point is, when you read how it works, XRP, it's like 90% of you need. I think it's 80. I might be wrong with the numbers here, but there's the aggregate of all the nodes. 90% needs to be approved by, when you have a list, or 80%, 90%, yeah. 90% of the list of coins of nodes you're going to connect to needs to be part of the approved list by Ripple. If you download this thing and you run it, you need to have a list first. Who am I going to connect to? And if you connect all with your friends, you'll be on a separate network. It doesn't work like Bitcoin. So you have to connect with other nodes, and those nodes have to be 90% of your nodes to be able to have a consortium, because it's not based on proof of work and all that. It's just like an agreement, So therefore, 90% has to be from the Ripple approved list. But 80% or 85% is the, what is the term that when we say all of the 85% of the nodes have to approve something to be consensus. And there's actually, when you have a vote in something, you need a certain amount of people to be able to.
Or like a super majority?
No. To be able to, we have enough people to be able to hold the vote.
Quorum.
Quorum. Yes.
Thank you.
Thank you.
Goodbye.
Two for Gary today.
Yeah.
Two for
Thank
Gary
you, Gary. So you need 85% of the quorum in the approved list to be from of the coin for the transaction to be approved for the node. 85% of all the nodes. But since 90% of the nodes are the one from approved, they always have, at least by a 5% margin, the ability to always have their approved nodes approving the thing. So how much of those nodes are actually, part of a consortium of banking cabals or whatever? It's like, what, those transactions will get removed, or we're going to do censorship, or Bitcoin transaction censorship, or a variety of things. Or even they could, at some point, they could rewind the blockchain. It's not fixed in stone because there's no proof of work, So they could move things even if you don't want to. It's, whoops, I had that balance and it's no longer there because, they just created a transaction where they take it away from you, whatever. I mean, there's many things that could be happening that will not be happening with Bitcoin.
It's like the anti-Bitcoin. It seems completely antithetical to everything that Bitcoin is and represents, in the sense that, like,
it's the most far away from Bitcoin of all, I think. Yeah.
We've got literally a company pushing this. So we've got Ripple, so you got centralization there. It's voting based with proof of authority, basically, on getting consensus of what's going to go through. And like you said, I forget the way they phrase it, but it's literally a list of trusted nodes. Like, it's a system built on trust. Like, oh, these are the trusted validators, the trusted nodes. And we'll decide who qualifies and has proper security in these things to make it onto said list. It's just commercial banking reimagined. Like, there's nothing else to it. And the other thing too is it's the first 32,590. They don't call them blocks, they call them ledgers or whatever. Yeah, the beginning of the chain is gone. They had a bug that's missing. There's their first 32,590 entries just poof, gone.
Yeah. It might be very convenient if there was any kind of accounting that would be suspicious in any way or whatever.
Mm-hmm.
It's gone.
Yes, I'm sure that'll always hold up. It's like, oh yes, I am. It's just that never happened. That transaction never happened. Which, you're right, they have complete control. They could roll it back. It's completely centralized, and that's always what you're giving up. So they're giving up both security and decentralization in order to have speed. Which really, in this day and age, you could just use Visa as well too. Like, there's no necessary. The other thing that I found when I was digging into it a little bit as well is, because again, maybe you could touch on why this is important for decentralization, Phil. But like, you can't really run an XRP node, right? You can't do that easily. I was trying to figure out the requirements for it. These things have like 5 to 10 plus terabytes of storage you're going to need to have. Their uptime basically has to be 100%. Your internet bandwidth has to be at high levels as well too. And you're going to need, basically, it's recommended you need 64 gigs of RAM. So it's not, right, this isn't like, oh, I can just grab a nice little computer and I can have this sitting up and I can do it myself. Exactly. It's going to, I was reading it somewhere, but it's somewhere I was reading that they have cloud backups because they need to be on all the time. It's like, you're just on Amazon. Like, you're just on Amazon web servers at this point. Yeah.
And it's actually funny because you mentioned this, but proof of stake, in many cases, the nodes, those operator, they were running on the cloud as well. And so if you say, okay, pick a one, a Cardano, for example, and then you look at it, okay, this one is on Google Cloud, this one is on AWS, and this one is, but 70% is on AWS and 20% Google Cloud. And okay, so that means, those clouds, any kind of issues or anything that happens to those, and this thing is really having a big hard time, figuring out and what happens when those, because when you understand how proof of stake works, it's forward scheduling of who's going to be mining the next block, mining, quote unquote. It's based on, a randomness. It's well crafted on, again, it's well crafted, but it's more subject to issues than proof of work, because they'll have to schedule ahead. Okay, the next 1,000 blocks, we're going to divide it. Okay, 5 of them, it's Gary. He's going to be taking care of block number 200, 205, and 220, and so on. And Nathan, you're going to be mining to 230, to 202, the next block after Gary, and so on. And so, but if you're all running in the same cloud and that cloud goes down, a bunch of blocks, then it has to be the second layer, because there will be multiple, a second person, third person, whatever, if the first one is not there to mine, but with a delay and that kind of thing. So it gets slow. It might be possible, but then it's just gonna be awkward in terms of what's gonna happen with those things. And the other thing is, like, it's an argument I put up. It's like the guy on the island. Think about the Castaway movie. Mm-hmm. The guy is stuck on 4 years. Imagine they just came back and he had Bitcoin and he had Gardanos, for example. And so now there's a guy comes in with his laptop. He says, "Oh, I can make you, I can buy you the island," or whatever. Suppose he owns the island, and he could fabricate entirely a new chain of Cardano block. How would he know unless he remembers all the miners, the node operators' public key, to be able to match? Okay, it fixed. I see that it's signed by this node operator and this node operator. While Bitcoin, all you have to do is how many hash power is there in those things. Oh yeah, it's a continuation, big hash power. That's it. All you have to remember is how many zeros, leading zeros. It's to be able to via confirmation. If at least there's a serious amount of zeros, then that's like somebody can't fabricate those things. And so that's a big distinction as well.
Completely agree. It needs to be permissionless, and it needs to be tied to reality as well, too. There has to be a physical cost associated with trying to reorg the chain, right? Proof of stake is just self-referential. Proof of authority is not. It's just authority, right? So there is no actual cost to doing these changes or making these manipulations as well, too. It's a wonderful little reminder, and it's something that I think we've lost with just the fiat system, that we've relegated so much of a responsibility to other people, right? And so it's not your keys, not your coins, don't trust verify. And part of that as well too is that if you're not the one running the software, if you're not the one checking, you're relying on somebody else. You're having to trust somebody else, which means there is a centralizing point, there is a centralizing force that can be coerced or just be malicious against you, or even just make a mistake.
Yeah.
Incredible. Gary, what are the questions you got, man? What's on your mind?
Well, you mentioned before, obviously actions speak louder than words. And Phil was saying that there are people in XRP, for instance, who are gold bugs, Austrian economists, but still they're pushing this thing, which is very antithetical to that idea. It's very centralized, very central bank. So I guess my question is there anything in the Bitcoin space, whether being pushed maliciously or even with the best and purest of intentions, that you think is bad for Bitcoin in the future?
Yeah. So, there's an aspect of, for example, Michael Saylor and the MicroStrategy, or strategy now, I think. Is he doesn't want to reveal the Bitcoin address holding. He owns Bitcoin. The company owns Bitcoin. It's a public company, but they're gonna keep the Bitcoin address holding, and it for a security perspective. Well, do you think it's going to be hacked if someone knows which Bitcoin address? No, obviously not. So it's more about, okay, they know it's an accounting that's made public. If they're going to be making the accounting available for how many pencils they buy and whatever that is, all the operations, but they're not going to make an accounting public of, oh, here's the Bitcoin address we have. I think that's one thing is like that, even though I'm not a fan of regulations, whatever, anarcho-capitalist that I am. So, but what I would look forward is actually is like as part of their requirements for any public company that claims to own Bitcoin as their holding to also publish their Bitcoin address, so that at least those who are buying the stock can have a certainty that there's no, they're not actually buying paper Bitcoin, but really, at least the company is really invested in Bitcoin. It's not a fake things. Yeah.
At the risk of sounding cruel, could I just not reply with caveat emptor? If the company does something nefarious, that's all the more reason to buy Bitcoin directly instead of trying to get exposure through a company. So lesson learned.
Oh yeah. The number one rule is always to be more interested in buying Bitcoin directly, holding them and yourself. And I understand that for many people, it's just too freaking scary to own Bitcoin and hold them themselves. It's like, what if I die? I need to provide this. But then if I write that down on paper, if my house burns down, the paper is burned down.
I have a treasure map and a series of riddles. My family is fine.
Yeah, that's the way to do it. Mm-hmm. They're going to be on the 1 year search. But it's did you base that on the movie?
It was Goonies, actually.
Oh, okay.
Yes.
Okay. Good.
Beautiful. And just out of curiosity, just a little light speculation. Because I agree, there's no security risk necessarily with giving out the public address, or even sending a message from that address as well, too, right? It's not exposing the keys. But if I remember correctly, like there's some split between different custodians, but mostly with Coinbase. The only thing I can think of, and maybe it is, so I'll do like the steel man in the sense, like, okay, perhaps the Bitcoin for MicroStrategy is held at, say, custody or Coinbase, but whoever's involved in control or access to those keys, maybe they rotate, just people either leaving the company or moving through different positions, or maybe there's some sort of just like key management rotation protocol in play, which which would mean that the coins might actually move to different wallets. You might see it hopping around to different addresses. And so if that's publicly exposed, that might have people think, if you knew Saylor's address and you saw it move, what's every Twitter feed going to say? He's selling, he's dumping, it's hacked, right? Every single time, which would just be a pain in the ass for his stock price. So that I can give some credence to. But I'm curious if we go the other side, if this is maybe not a best intentions, or maybe there is something else. What motivations or reasons do you think there might be for obscuring that information?
Wow.
Pure speculation. We don't know anything.
I need a lawyer here. I don't know. The thing is, there was a movement at some point. I think Jimison Lop was behind that too. A day once a year that everyone pulls out their Bitcoin and they hold it themselves. Anything they have on an exchange, you move it to off. So for 24 hours, all the exchange in the world, they're empty out. And that prevents any kind of shenanigans where, the exchange pretends they actually own and you're trading more Bitcoin, which is something that is happening with the silver and gold futures. There's something like 100 times more paper silver contracts than actual ounces. I think it's even maybe 200,
Wow.
And, which means that, you could have a severe situation crazy on that, where the spike of the price like crazy in any kind of crisis. But for Bitcoin, with fact, it's by nature electronic, there's no excuse to the overall financial system of any country to make it obscuring this aspect when you can have it with an accounting that is visible for anyone. And that's the beauty of it. And people should remember this, and then to leverage this aspect of Bitcoin.
Completely agree. It's the instant rug pull, right? I think Lynn Allen's talked about this too, that compared to like the bank runs of history, is that these can happen much more frequently and much more violently in Bitcoin, which doesn't mean that like people won't rehypothecate and pull these stupid games, FTX, Quadriga CX, like Mt. Gox issues and stuff as well too. But it means that they'll probably happen at such a speed and cadence that eventually everyone's like, nah, we've seen too much of this go wrong. Hopefully, again, they'll touch that stove, they'll get burned, and they won't repeat it anymore. Before we get to kind of wrapping things up here in a second, I did want to ask, so we touched on earlier some of the additional writings and new additions to the book, the Book of Satoshi as well too, which by the way was the second book I read when I got into Bitcoin. So I really appreciate that. It was one of my favorites. I think I don't even remember the mindset, but probably initially it's like, I got to know who this guy is. I got to find out a little bit more about him.
Yeah, the same thing for me.
Was there anything in the new additions, the new writings and emails and communications that were found? One, I'm kind of curious, what was the context of the conversations that we were having, if you have any insight into that in the new emails? And was there any other insights that you gleaned from it that you found particularly interesting or surprising?
There were tidbits of information and interesting, mostly between Satoshi and Martin Malmy. Because with the other ones, the exchange were so small that there wasn't any enough information to get an idea of how the way things and so much. But with Martin Malmy, the sheer amount of emails, and so at some point you get to form a familiarity with someone, I guess, and there's a bit of a conversation, but still it remains very, very technical all the time, all related to Bitcoin. He never mentioned anything about himself, and Martin never asked either. But there were a couple of things that are interesting, including actually a passage about Ripple, and which is funny. And so obviously, I think the Ripple guy picked up this thing and they blasted it off. But when you read between the lines, you understand that you have to. He was not really praising Ripple XRP. He was not just pointing out that at the time, because this actually, the technology, the idea of something like Ripple was already prior to 2008. There was some form of existing concept like this before. And, it's like, okay, before you can think of breaking the problem of the Byzantine generals problem, which is what was proof of work resolve, before you had that concept, the best thing you could imagine was something like this, like what was done, Ripple XRP, which is, not perfect, but at least you had something. Obviously, it's not something is going to stand against big banking system. If that currency XRP was the thing that came out, not Bitcoin, or if we didn't have anything like proof of work, they would have been able to crush this. The reason why they didn't crush those altcoins like XRP, the banking system, whatever, is the reason why is like, well, if we do that, we can't do that to Bitcoin, and people will see that it will even give more value to Bitcoin. People will say, yeah, we can't crush Bitcoin, but we can crush all those altcoins like this. And it's better for them to divide and conquer, is let them spread their loves across all those altcoins. They love that there's 3,000 altcoins out there in the banking system. I'm sure they do love it, because then it's actually, it divides and conquer. But that's an aspect,
Very cool. Gary?
I'm gold. I don't want to take too much of your time, Phil. We're already at like an hour, 7 minutes.
Beautiful. All right. So with that, Phil, please tell me, where can people go to get the books? Where can they go to follow your work? Give them all that information.
It's available on Amazon. So this and the book Bitcoin vs. Altcoin. And now the problem, I need to contact Amazon here, because when you go to Book of Satoshi, it'll show you the first edition. You have to go and click other editions or whatever, and then you click down, and then you see all the variations of all the other formats, including other edition. I wish I'm not sure why, but it still shows the first edition, and the hardcover, the Book of Satoshi second edition, is separate. So I also have to ask them to bring it back, and so they have the same account as the other one, with the same reviews and all that for the second edition. So of the hardcover, yeah.
Phil, what's the price of your books in sats?
My God, it's above 1.
Good answer. Okay.
Beautiful. And Phil, where can people go to follow you? Twitter?
Yes, Twitter, egg_descrambler.
If you enjoyed this video with Phil Champagne, please like, share, and subscribe, and check out our previous video with macro analyst Keith Dicker.